If you watched Friday's rate breakdown, this is the piece that moves those rates over the next 2 weeks. Everyone is calling June's inflation report great news. It might be the opposite of great news for your rate lock timing. And here's why. I'm Robert with Open Lane Funding in Spokane Valley, Washington. June's consumer price index fell 0.4% over month, the largest single month drop since April 2020, pulling annual inflation to 3.5% from 4.2% in May. Core inflation was flat at zero monthly, well below the 0.2% consensus. Energy prices cratered 5.7% as oil retreated from its earlier peak. Producer prices confirmed that same story. They're down 0.3%, also the largest drop since April 2020. So here's the part that most people miss. The data was collected before the oil spike, back up to nearly $82 a barrel on a renewed Iran conflict. The core inflation is the figure that the Fed watches most closely, actually held at 5.1%. That's the highest since October 22 or 20 October 2022. My goodness, if I could get it out. Fed Governor Waller said it plainly on July 13th. It will take several months of positive readings to convince the Fed inflation of moving back to target. If you want to stay ahead of how this affects your next rate lock, go ahead, hit that subscribe button, hit that follow button. I hit these types of videos every single week. Jobless claims improved to 208,000 for the week of July 11th, down from 215,000, and continuing claims fell to 1.805 million. That is a stable labor market, which gives the Fed room to hold rather than cut. The CME Fed Watch prices at 88.8% probability of a hold on July 29th, but September hike odds have climbed to 44 to 51% as oil-driven inflation risk reasserts itself. And here's the investor action plan. The July consumer price index due August 12th is the number that decides which story wins, June's disinflation or the oil reversal. If oil holds near that $82 or above per barrel through July through the reference period, expect a hot CPI print and a firmer September price hiking. Now, this is a 2-week window that locks deals before the data lands. Don't wait. For the rates to drift lower. Locally, this matters for Idaho and Washington investors, even nationwide investors. But these local investors watching that Section 301 tariff finalization targeted around July 24th, which will affect construction costs on any fix and flip or build to rent project. And that's actually going to be more nationwide. But good news on paper does not mean lower rates ahead, especially when oil is the swing factor. So if you want actual loan scenarios and deal structures behind these numbers, book a call at openlanefunding.com. Hit me up at 208-215-9936 so that we can go over how we can help you get your deal structured and properly to make sure it's cash flowing and to make sure the numbers work out. Thank you, everyone. I'm Robert with Open Lane Funding. I'll see you guys on Wednesday.